The truth about Forex, Bitcoin, and gold trading. When people think about financial freedom, trading is one of the first ideas that comes to mind. The promise of turning small investments into life-changing wealth seems too good to ignore. Whether it's Forex, Bitcoin, or gold, these three markets dominate conversations around building wealth, side hustles, and even quitting your 9-to-5 job. But behind the flashy ads and motivational quotes lies a deeper reality, one filled with risk, complexity, and cold, hard truths that many don't talk about. In this video, we'll break down the real story behind Forex, crypto, and gold trading, exposing myths, revealing facts, and helping you decide if any of these paths are right for you. Let's start with Forex trading, short for foreign exchange trading. It's the process of exchanging one currency for another, in the hopes of profiting from the changes in their value. You might trade something like the euro against the US dollar, EUR/USD, or the British pound against the Japanese yen, GBP/JPY. The Forex market is the largest financial market in the world, with over $6 trillion traded every single day. It's open 24 hours a day, 5 days a week, and used by banks, corporations, governments, and individual traders. Sounds massive, right? That's because it is. But here's the truth most people don't know. Over 70% of retail Forex traders lose money. The reasons are simple: lack of experience, poor risk management, and most of all, misleading expectations. Many people enter Forex thinking it's a quick way to make money. They watch Instagram reels of so-called Forex millionaires, showing off luxury cars, vacations, and huge profits. But what you don't see are the months of practice, the blown accounts, and the psychological toll it takes to actually trade profitably. One of the biggest dangers in Forex is leverage. Leverage allows you to control large amounts of money with a small deposit. A broker might offer 50-to-1 or 100-to-1 leverage. That means with just $1,000, you could control a $100,000 position. Great if you win, but catastrophic if you lose. Many new traders blow their accounts within days or weeks because they don't respect the power of leverage. They don't have a trading plan. They don't use stop losses. They react emotionally, and the result is predictable: failure. So while Forex can be profitable, it's not a shortcut to wealth. It requires deep knowledge of technical analysis, macroeconomics, and strict emotional discipline. The best traders treat it like a business, not a lottery. Now let's switch gears to something far newer and trendier: cryptocurrency, especially Bitcoin. Bitcoin was created in 2009 as the world's first decentralized digital currency. It's not controlled by any government or central bank. Instead, it runs on blockchain technology, a public ledger where transactions are verified by users around the world. Bitcoin started as a nerdy experiment, but today it's being seriously discussed in boardrooms, on Wall Street, and even by governments. In 2010, 10,000 Bitcoins could barely buy 2 pizzas. Fast forward to recent years, and that same amount could be worth hundreds of millions of dollars. Sounds like a dream investment, right? Well, yes and no. While Bitcoin has made many millionaires, it has also burned countless traders. Volatility is extreme. Prices can swing 10%, 20%, or even 30% in a single day. What looks like a breakout can become a crash in minutes. The crypto space is also full of hype, misinformation, and scams. Meme coins, pump and dump schemes, fake ICOs, and rug pulls have cost inexperienced investors billions of dollars. Social media plays a massive role in this, with influencers pumping coins for personal gain. Many promote coins they already hold, convincing their followers to buy in, only to sell at the top, leaving everyone else holding the bag. Another issue is the lack of regulation. Unlike stock markets or Forex, crypto trading is still the Wild West. Many exchanges operate in loosely regulated environments. This opens the door for manipulation, insider trading, and wash trading. So, while the opportunity to make life-changing money exists, the risk is equally high. You need to approach crypto with a skeptical eye and a deep understanding of market psychology technical analysis, and risk management. Also, trading crypto is not just about Bitcoin. There are thousands of altcoins, some with real potential, others with none at all. Many traders don't do any research. They just buy what's trending. That's not trading, that's gambling. True crypto trading involves understanding tokenomics, project development, community engagement, partnerships, and of course timing. Now let's look at an asset that stood the test of time: gold. For thousands of years, gold has been seen as a store of value and a hedge against inflation. It doesn't rely on a government, can't be printed, and doesn't lose value the way fiat currencies can. When times are uncertain, wars, inflation, banking crises, investors typically run to gold. But is gold trading really profitable? It depends on how you do it. Gold is less volatile than Bitcoin and Forex, but it still moves. Events like Federal Reserve meetings, inflation data, and geopolitical tension can cause sudden price changes. Traders can buy physical gold, gold ETFs, or trade gold CFDs, contracts for difference. Many use it as a hedging tool, while others trade it based on price patterns and economic forecasts. Unlike crypto, gold has centuries of price data, making it more predictable in some ways. But it's far from risk-free. Gold prices can stall for years. If you buy at the wrong time expecting fast gains, you might be disappointed. Also, just like other markets, gold is impacted by central bank policies, interest rates, and inflation expectations. It's a complex asset and deserves to be studied before jumping in. So what's the bottom line? Whether you're looking at Forex, Bitcoin, or gold, one thing remains true. There's no such thing as easy money. All three markets offer real opportunities for profit, but they also come with serious risk. If you're not willing to study, practice, and develop emotional discipline, these markets will eat you alive. Let's be honest, most people aren't losing because the market is unfair. They're losing because they treat trading like a game, not a business. They go all in on hunches, follow strangers' tips online, and trade based on fear or greed. They ignore basic concepts like risk-reward ratios, position sizing, and stop losses. They don't journal their trades or track their performance. That's not trading. That's gambling with extra steps. Forex, Bitcoin, and gold trading aren't for everyone. They require time, effort, and the ability to control your emotions. But for those who take the time to understand the game and play it smart, they can offer powerful opportunities. Just remember, in every market, there's someone on the other side of your trade. Don't be the one who's unprepared. Thanks for watching. If you found this video helpful, make sure to like, subscribe, and leave a comment below. What's your experience with trading? Which market are you most interested in? Forex, crypto, or gold? Let us know.